This lesson is on the marginal rate of tax and the average rate of tax, which is a higher level concept. And please keep in mind that for IB exams, this would be a paper 3, the quantitative paper. You could be asked to calculate average and marginal direct tax rate, so that's tax on income. You could be asked to calculate the average and marginal indirect tax rate, which is on tax on goods and services, or the average and marginal total tax rates, where we're going to combine both income tax and sales tax together. In this slide, we're going to look at only the calculating the direct tax rate. On the homework assignment, you'll be asked to calculate both and also the combined. But the homework assignment will be very straightforward. This will really tell you of the most complicated things you need to know. The table below shows the income tax rates that apply to different ranges of earnings for workers in the economy for a particular country. And one student asked, is this sort of in line with what we might see? And it's not far away from, for instance, what Canada has, where the top income tax bracket is earning 48%, and in this table it's 50%. So we're going to deal with a low income, a middle income, and a high income earner, and we're going to see how we're going to allocate their salary to the different tax brackets and see how they pay at the different tax rates. So to calculate the average tax rate, what we need to do is look at their total tax paid, and we'll see how we come up with that figure. It's through a series of separate calculations where we add it together. So the total tax that they pay divided by their income, and because it's a rate, anytime you see the word rate in economics, probably science and math as well, we multiply by 100. So individual A earns $15,000 per year. So we're going to see how we figure out what they pay in taxes. So how this table works is that we look at the very first $5,000 in income, and that's taxed at 0%. So in other words, there's sort of a forgiveness of the first $5,000 where no tax is paid. So we show our workings, because for paper 3 they want to see your calculations. And also, if you show all your calculations and you end up making a mathematical mistake, you'll end up getting part marks. Whereas if you don't show your calculations, number 1, you won't get full marks, but number 2, if you end up making a mathematical error, rather than getting 0, you'd get part marks. Okay, so we've taken care of the first 5,000. Since the person is earning 15, that means that we still have 10,000 in income to take account. So we look now at the next step. Well, the next step can take into account another 15,000 in income, but this individual, we only have 10,000 more to take into account. So we take the 10,000 and we multiply it by 20%. So this is going to equal 0 plus 2,000, and so the total tax paid is $2,000. And let's just make sure we haven't made a mistake. We've taken 5,000 and added 10,000, which indeed is the 15,000. Okay, the average tax rate is going to be total tax divided by income times 100. So that's going to equal 2,000 divided by the 15,000 of income times 100. And in economics, unless they state otherwise, they want your answers to 2 decimal places. So 13.33%. Okay. Let's look at what the middle income earner pays in tax. Okay, so this person earns $38,000 per year. So again, we're going to take the initial 5,000 and multiply by 0%. The next bracket can take into account another 15,000. Well, 15 and 5 doesn't yet add up to 38, so we can take the full 15,000, multiply by 20%. And so that leaves us with 5,000 plus 15,000 is 20,000. And so we have another 18,000 to take into account. This tax bracket can handle up to another 20,000, so we can allocate the full 18,000 here, being taxed at 40%. So this equals 0 plus 3,000 plus 7,200, which equals 10,200. Average tax rate again is total tax divided by income times 100. So that will be 10,200 divided by 38,000 times 100, and again to two decimal places will be 26.84%. So we can also see that this is a progressive tax because individual A had a lower percentage of their income paid in taxes than individual B who earns more. So this is a progressive rate of taxation. Now let's see for the high income earner. Okay, so this individual earns 90,000, so we know the first 5,000 is tax-free. We can take into account another 15,000. We can take into account another 20,000 for this tax bracket. And let's just do a check here. So far we're at 5,000 plus 15,000 plus 20,000. So that's at 40,000, and that of course coincides with this. We've taken care of the first 40,000 of income, which leaves us now with another 50,000 taxed at 50%. So their tax bill is 36,000. Looking at their average tax rate, we've got total tax paid over income times 100. So we've got the 36,000 over the 90,000 times 100. And we end up with 40%. So once again, we can see that a higher proportion of their income is being paid in taxes, and so it's a progressive tax, as we pointed out last time. Now let's see that individual B has been given a raise, and they've increased their earnings from 38,000 to 48,000, and we want to know what the marginal tax rate will be. Well, first of all, what does that mean? If you were individual B, you might be curious to know, okay, you're going to earn an extra 10,000 in income, but what will that extra 10,000 in income be taxed at, just for that 10,000? So you're going to look at the change in total tax paid, and you're going to divide it by the change in income and multiply by 100. So we know just for that chunk of money, what is going to the government. Okay, so individual B now pays in taxes Now you can pause the video and you figure it out and see if you get the same answer. So how much more in tax? We look at the tax paid now, subtract it from the tax before that we calculated, and we see that they're going to pay 4,800 more in taxes. We know the income has risen by 10,000, but we'll show our calculations to get full marks. And the marginal tax rate is going to be the change in tax paid over the change in income multiplied by 100. And we see that that extra $10,000 has been taxed at 48%. Now we want to see if that's reasonable. If we look at where we fall in the tables, we would have from 38 to 48,000, we would have 2,000 being allocated in this tax bracket at 40%, and then the remaining 8,000 here at 50%. So it makes sense that we're going to be closer to 50% because we've got the lion's share of the income falling into this this tax bracket or this rate of tax. So we're pretty confident that the 48% is correct. So why might this marginal rate of taxation be quite useful to know when considering a promotion? So let's say you're that individual B and you've been offered a salary increase from 38,000 to 48,000. You know that the government is going to take 48% of it, leaving you with 52% of it. So 52% of 10,000 would be left in your pocket. You might then want to divide that by 12 to see what you're left with after tax on a monthly basis, or divide by 52 to see what you'd be left with on a weekly basis. And then you can decide, well, with the extra time you'll have to put in, working weekends, longer days, time away from your leisure activities, time away from your family, is it the right choice for you to accept the promotion? And so this marginal rate of taxation can be very handy in terms of making personal lifestyle decisions and financial decisions. Thank you.